Hello viewers, now we are going to see natural gas, and let's go to last decades and give more broader context here. Thing is about natural gas in America that it has witnessed several structural changes in its consumption and production. It's not wheat which rises the same as it was 2000 years ago. Supply and demand for energy products are constantly changing due to the technological factors of its exploring, drilling, transporting and consuming. So there is that. So with that said, let's check out whether those technological changes have made any real difference in trading. But we see that in the late 90 till 91 and 92 we witnessed one good uptrend and one good downtrend, and made those predictable trend moves in next subsequent years, where it rise from 1.5 to $2 and then fell back again, and did that a couple of more times when it stabilized in 93 up until around late 95 for early 95. And to be honest, probably in late 80s to early 90s these were not the best markets for trading. Things slightly changed at mid to late 20s when it rose from 1.2 to nearly $3, then fell back again to 1.8 and made few spikes to $4.5, then fell back again to 1.9, then rose again to 3.5 and then fell back again. So late 90s were not that bad, but then price fell into range from 1.7 to 2.6 roughly around 2000, and then one good bull market started from $2 to $9. So five-fold rise from January to 1 year. That's pretty spectacular. And then it fell back again for next year. This is rather outstanding. This is like five-fold rise and subsequent decline in the same proportions. I don't know how future contracts traded it back in the day, but if traders will be able to trade at least part of that, that's rather spectacular. And then volatility continued, and from 2002 it rose from $2 to $11 and fell back again to $4.7, but I am not sure this spike was tradable. It looks like it was some kind of one-time event due to some shortages, or someone tried to corner this market and it fell back again. It looks pretty, but I don't think it's tradable. So global energy prices heated up, and American heating oil was no exception. So it was several times higher than energy prices in the mid 80s and 90s, and here the bottom is around $4.5, and it's continued to climb to 7.5, fell back again, rised again to $9.5, and then adjusted to $6, and then in 2006 went to $15. So almost triple rise in relatively short periods of time, and then subsequent fall to $5.5. Now this looks also for those markets. I remember in mid 2000s there were some issues about price speculations and attempts to corner markets, but I cannot recall, unfortunately, whether this was this spike or that spike. And one energy company actually went bust. It wasn't Enron was something else, or some hedge funds went bust when they tried to corner natural gas market. Whether it was this market, probably, but if you know, maybe you could tell that in comments. But anyways, after that natural gas continued to move in sideways from around $5. This probably was not tradable. It was some small spike till around $8. That continued around late 2007 when it rose from $7 to $13, and then when crisis hit it fell to $3. So rather spectacular uptrend and downtrend as well. And then after that it rose from $3 to $6 and fell back to $2, which is very low for natural gas. Yes, and then energy markets in natural gas were rather depressed. I think they were like historical lows here. Probably America managed to stabilize its energy market, and demand for natural gas stabilized, supply and demand balance, because mid 2000s were a difficult time for American energy markets, and fracking and other types of technologies bring America back as energy powerhouse. But yes, that's this decade, and due to that it fell to $2, but then it continued to climb from $2 to $6 and and back to $2 again. So this is nice opportunities for traders. These subsequent rises and falls gives constant trading opportunities from 2012 to around 2015. But then at mid 2016 market started to range and actually didn't go anywhere for like 4 years, with exception to one small spike. These are not the best markets for trading, but if you are looking long term, that's how trading does. That's how markets go, from spectacular trends here to ranging markets here. And of course, ranging markets ended when COVID hit, with historically low prices of natural gas, and made several fold climb to around $9 at summer of 2022. So as I always have saying you, ranging markets are sometimes ending and trends prevail. Our job as a traders is to maximize those opportunities which we have and minimize losses. That's eventual part of trading. So with that said, let's see how more realistic the trading environment will look for last couple of years. It wouldn't be great, but I don't think it would be that bad either. So let's see from 2015. Here is one good downtrend, small uptrends. Those boring ranging markets, they are break even at best. They have some small opportunities, but in this period from 17 to 18, you will be better off if you are break even. There wouldn't be much profit here. So things change slowly at 2019, where we have a couple of small trends from $3 to 2.5 and from 2.5 to $2. And then in 2020, 1, 2, 3 small uptrends, and then here's the interesting thing. Then in 21 it was good uptrend, and those good trends in 2022, well, it was difficult for long-term traders to trade them because they were so volatile. It was very difficult to capture them, but how it looks. It wasn't that bad in the worst markets, but it wasn't that spectacularly good in best markets. But what's the thing? On balance, it evened out. And that's the most important thing about good trading, as I have always said and will said. So let's see shorter time frames and see how those identical markets look in last couple of years. They look good because there is one good uptrend. But let's just check out it. I want to find worst market conditions so I have a little context. Otherwise I will be lying you with one good market opportunity and that's it. I don't want to do that. But let's see. Yes, in 2020 there were like several break-even trends in a row without much profit, because here you would like what, pay for your commissions, and that's all, because like this is 1.7 and this is like 1.69, this is 1.68, 1.75. You will be paying for commissions and fees, which will eat up those trends of nowhere. But yes, good trend started at summer of 2020, where you could made one good trend. Here you won't be making good money because of that large gap, unfortunately. So this trend is wasted. Other than that, there are small break-even trends. One good uptrend in 21, one good downtrend here in 21, but not spectacular. I wouldn't say no, this is not good trend, this is average trend, which would pay you for those long ranging markets. And then in mid of the spring in 21, one good uptrend, two good uptrends, and then in August 21, this is something more what we are looking for. This is good trend here, couple of break-even trends late 2021, one good downtrend and nothing much here. And yes, in 2022, one good trend, two good trends, three good trends, four good trends, five good trends. Yes, smaller time frames allowed for us to capitalize on those moves in global energy crisis. See, natural gas allows you to make good money in energy markets as it was expected. So if you are trading, world energy crisis should be major profit opportunity both in natural gas and in oil products. With that said, let's wait for my next videos and see other market opportunities in many other markets, because they are endless. Markets are endless and opportunities are endless if you know how to find them. And with that said, stay tuned. Bye.